today's video, I will be going over my full swing slash day trading strategy that I use to consistently profit. Just so you know, over the last month, or since the month has started, I've made over $1,500 through the prop firm Top Step, and yeah, my win rate's about 60%, with my average win loss being 5-0, basically meaning that for every $1 I risk, I get $5 back, and my profit factor so far has been 10, which is honestly amazing in my opinion. And yeah, just a couple of my statistics, my best trades, my worst trades, my net daily P&L, my P&L, win rate analysis, and overall just a great month that I've had so far. And I want to share with you guys a strategy that I use to make this happen. So first, let's talk about the core things, or the key things in my strategy. The first thing that I want to talk about is fair value gaps. Now, if you don't know what fair value gaps are, I'll quickly explain them, but there's probably better videos out there. So if you don't like my explanation, then you can take a look at some others. But basically, what a fair value gap is it's a 3 candlestick pattern. What you're gonna see is probably something that looks like this. So as you can see here, there's 3 candlesticks, and each one has their wicks and everything, and then in between this candle is called a gap, or is a gap, which I like to call a fair value gap. Now what sometimes happens is that sometimes the candles will go back down into this gap, and then you'll see a bullish reaction out of it. This is what I would call a bullish fair value gap. Now the same thing can be for a bearish fair value gap. If candles are going down like this, and you have this big candle down, say, and then this say you would have a bearish gap right here, and sometimes what can happen is that the candles would go back into here and then continue right back down. So what you're basically using it for is to take continuation trades. You're not trying to capture a whole move, you're just trying to basically trade with the trend, as I like to call it. Or maybe if the trend is consolidation, you can maybe see a breakout of consolidation, but you're not really trying to catch the absolute top or catch the absolute bottom. So one of the trades that I took a couple of days ago, I think maybe I shorted somewhere in this range, I want to say maybe I forget where, but basically, yeah, you're taking continuation trades. So you're not trying to find the exact bottom was right here and then capture that entire move up. No, you're just trying to trade with the trend. As the saying goes, the trend is your friend. So obviously, you're going to want to trade in the direction that price is obviously headed. Yes, sometimes price will reverse, but it's more unlikely than if you're trying to catch a full swing and then you just get absolutely stop rated and your stop loss gets hit. So yeah, that's the base of my strategy. It's using fair value gaps to take continuation trades. And there's many fair value gaps in the market. I'll show you some examples of them right now. Let's just go to the hourly, as that's probably where you can see it the best. But if you take a look right here, we have this big gap right here. As you can see, the candle's wick down, and this candle's wick leave a gap right here. And what happens? Price goes all the way down back into it. We kind of chop a little bit, but then what do we see? Oh, a big bullish move out of it. So maybe we long, I don't know, let's say, yeah, I'll show you how I find entries later, but basically I'll say we'll take a a trend, maybe target this high right here and put our stop loss right below it. So what is that? That's a 1.38 risk to reward trade, and obviously would have gotten hit. So yeah, this is just some example of a trade that is something that I could have taken. And this is also at market open, so that's when I usually trade, but I'll explain that later in the video. But the second key point that I want to talk about is highs and lows. Specifically, when trading Bitcoin and NASDAQ, highs and lows are very prominent and can be points of where, we see trends shift. So maybe we look to exit there. Mainly, yeah, highs can mainly be used for exits. So let's just take a look straight up. As you can see here, we have here, sorry, I'll mark it out. But what is this right here? A very prominent high. As you can see, this high is very, it stands out, I guess you would say. And as you can see, we come up here. Oh, what happens? You trade right into it, and then it goes back down. So highs and lows, prominent highs and prominent lows are places that price may reverse off of. Let's take a look exactly. See what happened here. As you can see, this is a prominent low. Sorry. What happens? Gets hit. We stop the downtrend. We break out into an uptrend. And this can be labeled as support and resistance, kind of, too. I mean, it's kind of similar, I guess you could say. As you can see here, this is price where, it had resistance right here, and then eventually it just tanked. So support and resistance and prominent highs are kind of similar, but they're also a little bit different. Yeah, here's some more examples. I mean, prominent high right here. You see we hit it. Downtrend, come right back up a bit, but then just dump. This may have been off of news, I'm not sure. But yeah, let's see some prominent lows too. Okay, here we go. As you can see, there's a prominent low right here. So what happens? Market comes down, hit it, and then it starts to shift. So these are the main two things that I use. I don't really like to use anything else besides prominent highs and prominent lows. And fair value gaps, it's mainly all I use when trading. Oh, and also bias, or not bias, but trend analysis. But yeah, those are the three main things. Here, I'll just type it out right now. The three main ideas. My trading strategy, which are fair value gaps, prominent highs and lows, and then we also have trend analysis or trend bias. Similar, or yeah, both the same thing. And also just so you know, the assets that I trade on are Bitcoin USD and NASDAQ futures, which are some of the most highly liquid, and yeah, they're probably some of the most highly liquid futures that you can trade. Top Step X offers both. As you can see, you have micro Bitcoin, and then you also have micro NASDAQ futures. So both what I like to trade. And I don't know, I haven't tested it in S&P 500 futures, but I would probably assume it would work if you were to trade that. Okay, so now let's look at how I time my entries. So basically, I almost always trade New York Open, which is 9:30 a.m. I start looking at the charts at around probably pre-market open, at like 8 a.m., 8:30 a.m., which is usually when the market starts moving. If we have high impact news or big news that day, you probably don't want to trade before, like right before or right after, as you can get stop rated pretty easily. One way that I like to check this is through Forex Factory, which offers a very good tool. Let's just go to Monday. You can see we don't have any high impact news, as you can see, because there's no red folder. I'll try and find an example. Okay, so yeah, as you can see on the Wednesday of on March 11th, next Wednesday, we have CPI, core CPI, everything at 8:30 a.m. So this is definitely going to move the market in a huge way. Don't want to trade before then, and definitely don't want to trade after them, because markets are just going to move however that gets announced. Same thing with Thursday, unemployment claims, market moves heavily, and then JOLTS job openings on Friday. So Monday and Tuesday don't have any news, so nothing to worry about, but Wednesday, Thursday, and Friday do. So now that I know this, let's say I come into 8:30 a.m. Here, I'll just use this Friday as an example. Actually, I didn't trade this Friday, so I'll use next Thursday as an example. Okay. So let's see what was happening. We come into 8:30, and what are we doing? We're kind of in a downtrend. As you can see, we had this big move up in morning, and then we're kind of just chopping up. Not really doing a whole lot. So basically I'm leaning bearish, but if something was to happen towards the upside, I would maybe take a trade there, because we don't really have any clear direction. We hit these prominent lows right here, so we could be bouncing to the upside, but as you can see, that did not happen. But let's just look and see what I could have taken a trade off of. So first, what I would have done is marked out I'll use FX replay. Okay, so first thing that I would do is mark out the 1 hour and 50-minute fair value gaps. So as you can see, we are hitting this 1 hour fair value gap, but we're not really seeing a big move out of it. As you can see, we're tapping. So, and we've filled it both. So my guess is that this probably isn't a very strong fair value gap. Market usually doesn't shift this big, but this is a strong fair value gap right here. As you can see, we hit it once, barely tapped into it, and saw a bullish reaction. So I would be looking at this fair value gap to take a trade off of to the upside. And on the bearish side, we have this fair value gap right here. As you can see, we hit it, then we're kind of leaning bearish, so we can see what happens. But this is 6, so let's go to 8 a.m. I don't think there was any news last Thursday. So, just to look out for that. We can see we're having a bearish reaction, so I always wait till market open to trade, so I wouldn't take a trade. But leaning bearish. And then what happens? Market opens and we rip up. This is a common scenario. Market opens just heavily volatility. But let's see. All right. So also something to note is that I start trading at 10 a.m. I never trade before that, as the market's still very volatile. But let's take a look at what happens. As you can see here, we hit these lows and then we bounced off of market open. We shot up, so I wouldn't be looking to take a trade yet. Let's get till 10 and then I'll see. Okay, so now it's 10 o'clock. I can start taking a trade. Let's see what happens. All right, so what do I see? The first thing that I see is that we've hit this prominent high. All right, so we've hit this prominent high and we're seeing a slight bearish reaction out of it, but we have rebounded. So let's take a look and see what we can do. All right, so we're kind of chopping from this level. It's now 10. Let's see how we go down. Oh, no, here, I'll go back one bar. what do we see? A huge move down. All right, so what does this tell me? Maybe this prominent high getting hit actually has some bearish momentum. So we go to the 2-minute, and what do we see? All right, so we see this fair value gap getting filled, or this fair value gap forming. All right, so let's see. Do we get a retracement into it? No, we don't. Okay, here. I thought we did before, but I could be wrong. All right, so yeah. Oh, maybe it was on the 1 minute that we did. No, I guess it wasn't. All right. Whatever. So we keep going lower, and eventually. Oh yeah, no, I took it off this inverse. So we had an inverse fair value gap right here, and I was already leaning kind of bearish after we hit this prominent high. So what did I do? I think it was a little bit far back that I shorted. I want to say it was about here. So I shorted my position. I think it was, yeah, it's probably from about right here. Put it at this, and then I targeted this low down here. And then, yeah, let's see how this trade played out. As you can see, kind of flushed down, and then eventually it got hit. And yeah, this was just a textbook setup for me. And then I forget if I took a trade out of this 5-minute fair value gap too. Let's see. I think I might have. Yeah, so I think I also shorted out of this. I forget, it might have hit break even. But yeah, so this is also another good example. As you can see, we fill this 5-minute fair value gap, and then we see a bearish reaction out of it, test it again, and then we see more of price dumping. So yeah, this is just how I did it on NASDAQ. Now let's talk about Bitcoin, which I like to trade too. So let me find a good example first. Oh yeah, I know I longed Bitcoin before this. Yep. All right. So what was this? Yeah. Okay. So let's see. This is from last Wednesday, and let's just do some pre-market analysis. As you can see, coming into 8:30, we are already bouncing out of this 1 hour fair value gap. So I'm already leaning pretty bullish on the day. I think that we were going to go up, and then, yeah, as you can see, touch barely into this, then come right back up, get a strong doji right here. And then what happens, 8:30, we fill this 15-minute fair value gap right here. So I'm just waiting to take a trade to the bullish side. I mean, you always want to have scenarios where you can take a trade to either side, but I'm probably leaning bullish on this day. So then let's take a look and see what happens. All right, so clock. And then, oh, sorry. So we reach okay, so we reached 10 a.m. and now let's see what happens. So as you can see, we reached 10 a.m. and we have this 15-minute fair value gap that got filled. We went up. We did take out this prominent high, but we didn't see a bearish reaction out of it. So I'm still leaning bullish. And then let's see, okay, so yeah, so the first sign is that we have this 2-minute fair value gap getting filled, seeing a bullish reaction out of it. And then plus we also had this inverse fair value gap right here, which tells me that we want to go higher. So I longed in this position, and I'm pretty sure I set my stop below this, and then I targeted 1-to-1. So so around there, and then eventually it got hit. So yeah, This week was also very good to trade with fair value gaps. Sometimes it's not that great, but yeah, just using trend analysis, using fair value gaps, and using prominent highs, and that's just the only thing that I use to be profitable trading these futures. Next week I'll update you guys on how I do, but if price action stays the same that it's been doing, then hopefully I'll be winning some more. So yeah, thanks guys for watching. And if you have any questions, just leave them right down below in the comments. I know that this is a pretty long video, but if you stayed this long, yeah, just if you have any questions, let me know down below. I'll answer all of them. And yeah, thanks so much for watching.